Hello and welcome. After spending 5 decades as a leader in the investment world, I've come to realize that when you are empowered with the understanding of how to make great investment decisions, then you are fully capable of taking control of your financial destiny and creating the next level of wealth that your greatest dreams actually require. And I've also come to realize that it's never too late. It's never too late to make an impact on your wealth. And as long as you start investing today and learning more today, you're going to be in the right place at the right space, and you're going to love your life. Hi, I'm Lynn Kitchen, and today I invite you onto the Economic Express. It's your ticket to the market insights for April 2024, and I'm so delighted to bring to you an opportunity to make decisions on your own as it relates to market conditions. You know, what is the purpose of making investment decisions relative to the markets? Well, it's because you make better decisions if you understand the current trends out in the marketplace. And every month, I make this presentation to my group of women who come together as a mastermind in wealth building. It's called the Wealth Builders Express, and I'm inviting you to consider that joining us. It's a powerful group of like-minded women. We are considering how to make investment decisions in certain economic environments that will create wealth. And if that is something that you would love, make sure that you come and join us today. The link is below. Well, let me get started because I have a very special amount of information to share with you today, because here it is, April 2024. April showers bring May flowers, and we are in the trend of springtime, having just finished a very powerful first quarter of 2024. In fact, it was so powerful, I'd love to share with you some of the insights that I have that I know that you will benefit from. So let's begin with a quick disclosure. Welcome. This is World's Greatest Wealth Builders Express, and we are a financial publisher, not an investment advisor. So everything that we say here is not to be considered by any means any kind of a recommendation for any investment at all, but rather for educational purposes only. Well, the 2000 bull trend is still on top of the world. The bull is king of the hill and continues to rage rampant throughout Wall Street. And you can see here that all of the other asset classes are vying to try to take the king, the bull, off of the top of the mountain, but the bull remains very strong. The horn of plenty is here, and I would like to tell you why, in my view, the bull is back for now and continuing into the month of April for three good reasons. One, AI. The power of AI has been the force behind the bull. In the first quarter and the last quarter of 2023 and the first quarter of 2024, we've had a full 25% increase in the markets, in the indexes, and it's been enormous in the first quarter of 2024 alone, up 11%. And this has been done in the environment of a supportive Fed. The Federal Reserve has come out and stated that we indeed are going to be seeing at least 3 interest rate cuts in the year 2024. And that has been supporting the upward dynamics of this bull market trend. And then the third thing is strong earnings. The companies of the Standard & Poor's 500 have been reporting stronger earnings in the first quarter of 2024 and are predicted to continue to create strong earnings reports continuing this month of April. So that is keeping the bull on top of the mountain. And, traders are looking, what is going to keep this trend alive? Are we going to continue into the rampant bull market upward, or are we going to change that around and begin to come back down? Well, it looks as if, as you take a look at indicators, the indicators are pointing toward a continued bull market. Let me share with you a few things that I am seeing in the markets now, and that would be that the bull is looking toward receiving more food by means of the leading economic indicators. They are improving. The gross domestic product, inflation numbers, and the possibility that the sentiment indicators, meaning how investors feel. And I know that as you're looking at your investment reports at the end of March, the end of first quarter, you might be rubbing your hands together and thinking, oh my gosh, these reports are looking very, very bullish, very, very up in your net worth probably has gone up significantly in the first quarter. So the sentiment indicators, our feeling as to how the markets are faring, has been the impetus for additional bull market trend. And then finally, interest rates, we do have a continued expectation that they will be the next direction will be downward. And that is positive, fueling the bull market trend. And then we also have this broadening of the breadth. Breadth means that there are more companies moving up in the Standard & Poor's 500 than moving down. And this is a recent chart by Morningstar that has shown, Bloomberg, that has shown here that right now in April, 70% of the Standard & Poor's 500 companies are actually trading above their 200-day moving average. And that is something that we haven't seen for, since early 2022. So that is an important indicator of a broadening of the advance. So not just the AI stocks moving up, although they have had a tremendous leadership role, but now the following group of companies are beginning to move up. And when that happens, we call it the breadth is broadening. That cycle certainly has legs to stand on. And then additionally, we'd like to point to some historic blue sky opportunities ahead. In the month of April, we normally have, after the first positive increase in the first quarter of 2024, the historic trends is for a positive second quarter. So April should begin a pretty good start for second quarter additional impetus toward the upside. We also have a positive election year coming up. We still have high employment. We have tax incentives, which are still in place, both for corporations and individuals. For example, the government is continuing to talk about forgiving student loans, for example. That's a tax incentive. And then we have high spending that is continuing, not only from the consumer base, but also the government is doing additional high spending. Well, that means that investors are more impressed with the state of the economy and the resiliency of the economy than they're worried about the Federal Reserve not cutting interest rates or pushing the cuts out into the future. So that kind of positivity has been the factors that are continuing to allow the bull to be on top of the mountain. Now, what could go wrong? There certainly are factors that we can look toward that could strip the bull of its position on top of the mountain. And let's talk about a few of those things now, which I can bring to your attention. And that would include how high, first of all, can this market go? Will investors begin to feel as if the market is too high and begin to sell into it? Well, this is a great chart by Morningstar, a very current chart I thought I would share with you about that shows the PE ratio. Now, for those of you who don't know, a PE ratio stands for price earnings ratio. And I do teach what the price earnings ratio is really all about. There's been quite a bit of worry and concern whether the PE ratio is too high relative to the rest of the market. Well, here again is a chart showing that the Standard & Poor's 500 PE ratio, which is simply a number that shows the relationship between the price and the earnings of those 500 companies, we are showing that the current trailing PE ratio is equal to 24. 24 compared to what? Well, the average of the PE ratio of the entire Standard & Poor's 500 over the last 50 years or so, the average has been 19. So 24, the current PE, compared to its average of 19, yes, that's high. But when we take a look at how high is high in the past, over the past decade alone, the last 10 years, we have seen the PE ratio climb as high as 28 in March 2021 and drop as low as 16 in December 2018. So the possibility that 24 is high, it's relative. It's not as high as we saw it in 2021. So the possibility does exist that the markets can go much higher. However, the real news is that it could be time for rotation. What does rotation mean? Time for rotation means that, well, nothing stays the same forever. We've had the bull market run being truly led. The leading indicators and the leading stocks, as we know, have been the technology companies, those companies that are booming up because of AI. Actually, in a parabolic manner, the prices have been going up so fast that it's been shockingly surprising to everyone, especially a wonderful surprise for those who have invested in those companies. But now it may be a time for rotation. It is a time for rotation. So springtime moves into a new opportunity for investors to take a look at what's next. So let's really look closely at what could be next and the possibility of what is the market going to be rotating into. All right. The next opportunity for rotation really is nothing more than a change of leadership. Not to say that the AI stocks won't continue up, they may, but there may also be some profit taking in those AI stocks. But the monies could then be moving a little bit down into what we call a change of leadership position for the lower priced sectors. So that would include the mid-cap stocks, meaning the middle capitalization, smaller companies, and the small capitalized stocks are beginning to show very much so a strength of their price leadership. In addition, we can look to the sectors of the market that we can place our new investment dollars. That could include materials, financials, energy, and utilities. So these lower priced sectors could be the next leadership of sectors of the economy that should show strength over the springtime second quarter. Also, we're looking to overseas markets where we can find value. For example, the British stock market, for example, the PE there is only 15 compared to the United States Standard & Poor's 500, which I just mentioned to you was 24, meaning that an investor in the British market could certainly find a cheaper opportunity there, as well as other overseas markets like India, Mexico, and the kinds of markets that are beginning to move up in this time, as well as commodities becoming the next leadership champion. Well, let's just talk about what we are looking toward in terms of leadership having, again, the bull market continuing along its journey up. What could take us away from that? What could possibly take the bull market off track, off of the mountain? And certainly there are concerns. There are difficult times ahead potentially. But how potential are those? What is the possibility or the probability that some of those potential problems could begin to bring to bear a real difficult, or at least a shift in the trend going forward? Well, let's take a look truly at what could be next. The stock market often says that it moves up on a wall of worry. If that's true, the bull market could continue to move up even when we are looking at dangerous storm clouds on the horizon. And these are 4 dangerous storm clouds that I see on the horizon. I'm going to go through them quickly. And those of you who are interested in learning more, I invite you to come to our membership group where we dive deeply into each one of these and more. First of all, geopolitical risk. There are wars that are affecting the economic stability. De-dollarization risk, a true threat on the horizon. Deflation risk. This is something that is the opposite of inflation. Deflationary risk does have indicators that we can study and look at. And then, of course, the debt risk, the highest debt load ever that the United States government has ever had, and the cost that it takes to maintain just the interest rate on the exorbitant amount of debt that the United States has is truly an election problem coming forth. These dangerous storm clouds could have a problem with what we are seeing in the marketplace. How do we determine whether those storms are actually going to be coming forward and having a problem? Or how do we hedge this big bull market? And how do we hedge against the possibility that the bull market may reverse direction? Well, that's called hedging. And an opportunity for us is coming along by means of looking at the commodity complex. The commodity complex will give us not only hints toward the possible future, but it also gives us the way through. What do I mean by that? Well, let's take a look at one of the most important economic indicators that's happening right now. And that would include the main commodity that is changing right now and changing the complexion of the entire world, and that is gold and silver, the precious metal commodities. And as of yesterday, April 3rd, 2024, gold made an all-time new high at $2,300 per ounce. That is an historic new high. And here is a chart where you can see over the last 3 years, the price of gold has truly just been going in a sideways pattern until 2024, when it broke out of that pattern and has moved up significantly since January of 2024 till today, a full 300 points on the upside. This kind of movement points to the possibility of a super cycle, what I call a super cycle of gold, a long-term bull market phase beginning for the gold markets. And silver has an interestingly similar chart pattern. Although silver trades at a lower price, the chart pattern looks almost identical. And this gives us the opportunity of seeing how one of the commodities is moving upward, and tells us that the opportunity ahead it means that gold could be a very good hedge against future danger. Oil as well, a second commodity that we need to watch. And oil also just moved up over a very, very important indicating mark of $85. Now, this is a chart that shows in the last 5 years how oil has behaved. And you can see that it got down in 2020 all the way down to almost $20 a barrel. That was during the pandemic. And then it boomed up in middle 2022 to almost $115 per barrel. And it has been going down in like a cup with handle formation. We call it a cup with handle formation, and just breaking out now from the 70 level, where it's been for a couple of 18 months or so, up through 85. That's a significant breakthrough for oil, U.S. And it might, it's interesting to also think about how the United States oil suppliers are utilizing this opportunity to muscle into markets across the world, as they are benefiting from sanctions that have been put on Russia and Venezuela. So that portends commodities moving up. And then not only just those commodities of precious metals and oil, but there have been other agricultural commodities moving up as well. And I'm going to show you one commodity that means a lot to me: cocoa. Cocoa has been striking highs. And unfortunately, it means for me no more chocolate, because chocolate is becoming so expensive that I can say that truly no more chocolate. At least I won't be consuming as much chocolate as I have been in the past. But commodities are certainly a way that we can look at some of the economic indicators of the future, and we will pay attention. Commodities are a great hedge against future inflation, as well as the possibility that the bull market may be weakening. If so, these hedges are a wonderful opportunity for you to take a look at your overall portfolio. Look to see if you have diversification, proper diversification in your portfolio. And then once again, I'd like to close on just kind of to wrap this up. I'd like to close with a conclusion here that for now, anyway, AI and the promise of technology and the future growth of technology continues to be in charge. The bull market, as it relates to what the strongest parts of our economy, continues to be in charge. So other disruptive threats that are on the horizon right now, that is not the case. However, it's important for investors to stay fully invested in quality, whether that means stocks or other cash flow growing assets, including real estate, but making sure that you diversify with intelligence utilizing commodities as hedges and making sure that you know what you're doing. And in that vein, I do invite you to come be with me in the in our wealth building express train for women, where we are studying all of the trends. We're learning about AI. We're looking to the future. We are making sure that our portfolios are fully diversified so that we can take advantage of not only the bull market trend that is continuing to be in place in the second quarter of 2024, but also how we can protect ourselves for potential storms that may be brewing ahead. And of course, the whole idea here is to create wealth over time. If that's something that you're interested in, I invite you to like my podcasts, to come back often, to join me, and make sure that you check us out at the Wealth Builders Express and come join me. And so that's it for today. I hope that you have a beautiful April. Enjoy the April showers that bring May flowers, and may you always prosper. Thanks for being here.